Hey friends, welcome to Money Log. So today we're looking at a complete guide to cryptocurrency trading for beginners. So on this episode, we're going to be looking at trading versus investment. So first of all, let's talk about trading. Let's look at the definition of trading. Trading is a fundamental economic concept that involves buying and selling of assets. So this can be you buying something like a small bar of chocolate and selling it for an higher price. This is what a trade is. In terms of the financial markets, the assets that are traded are normally called financial instruments. So these financial instruments can be things like stocks, it can also be bonds as well, and it can be cryptocurrency. So these are the financial instruments that are normally involved in trading in the financial markets. So trading in itself is normally referred to short-term trading. This is where traders actively enter and exit positions in a relatively short time frame. However, this concept is slightly a misleading assumption in the fact that there are different wide varieties of strategies that people can use. So these strategies include things like day trading. This also includes swing trading as well, and this also includes trend trading, as well as so many other different forms. So we will go through all these forms of trading later on in this series. So if you guys are interested, please don't forget to subscribe, and I will go through each one of them and break them down to the simplest possible answers for you guys. So compared to trading, we have investment. So investment is quite different from trading as well. So in investing, what we are talking about is creating creating capital or creating profit by allocating resources to particular things. So one of the things that we can be talking about when we're talking about investing would be for you to put money into a business, for example. So when you put money into a business, over time the business does get better and generate revenue. This is what investing is. It might be in your own business, it might as well be in another person's business, and this also generates more profit for you over time. Another concept that we can think about when we talk about investing would be you buying a piece of land, for example. If you buy a piece of land for, let's say, you buy a piece of land for about $10,000, and 20 years later, this piece of land, and 20 years later, this piece of land sells for about $100,000. This is what the concept of investment means. This means over a 20-year period, you have made much more money that you invested initially in buying that particular piece of land. So, investment can be a very good thing in a lot of ways, but the concept of investment means this is a long-term strategy. This means you seek to earn profit over a long period of time. This can take a matter of years or decades for you to be able to earn a huge profit. While for trading, this is you earning profit in huge bursts. The difference between these two particular devices is the point that one gives you a huge return on the effort you put in, which is investing. Investing usually has a bigger income compared to that of day trading or compared to that of trading. And but you do have to wait for a long period of time. So this depends on you in particular. When we talk about investing, we can talk about things like Bitcoin, for example. If you bought Bitcoin a number of years ago, right now you would probably be one of the millionaires in the world, as Bitcoin has recently taken off. So a lot of people are reaping the rewards of buying Bitcoin a long time ago. So it is things that you probably would not imagine sometimes when it comes to investment that do generate income. But there are things that normally are set to generate income, such as buying of lands or buying of properties. These are very good strategies for long-term investment because most times, if you buy a property or land in a good location, then the investment will eventually pay off. Be it years or decades, the investment always definitely pays off. So something that we should think about when we're thinking about these particular strategies of trading and investment is the fact that trading is a short-term gain. It's a short-term thing. You rely on short bursts when the market fluctuates, when it goes low and when it goes higher, while investment is a long-term profit scheme. So this means you buy the property or you buy the land and you wait for a longer period of time for your investment to show its reward. Generally, investment does give more money than trading. So it just depends on your particular idea of the two of them. In terms of which one of them is better or which one's more suitable for you, this would be determined by you personally. You have to decide if you are someone who wants short bursts of income or you're someone who would rather wait for years or decades to have a large or huge result compared to the both of them. So, any questions that you guys do have about investments or about trading, please don't forget to leave it down in the comment section down below and I will definitely answer you guys. So thank you guys so much for watching and see you guys in the next one.